Hey, how's it going? This is Kenny with Keller Williams Realty. Hope everybody's having a great week. Thanks for checking me out. And I'm just going to go right into this week's video, continuing to follow the market. And it looks like we're having a shift, a possible market shift coming up, and it's already starting to happen. I pulled up this article from Fortune that was pretty interesting. Excuse me. Um, it's telling a little bit about what the effect of the rising interest rates are. Now we know they're already over 5%, and it's said that the Federal Reserve Bank is is set to raise interest rates by 0.5% in each of the next two meetings. So they have like a meeting every month or whatever. So that's a whole percent coming up. They have to aggressively raise it to fight inflation, which is up. And I was just doing an order on Instacart, to buy some groceries, and my goodness, everything's up. I was like, I had like a $5 box of granola bars. I'm like, my God, like how much is like each one, like $1 or something? Like it's ridiculous. So, but everything's up. Housing's up, cars up, food is up, you name it, everything's up. And they're just listening to the economists. Inflation is way up, so they have to be aggressive in raising the interest rates to try to bring it down. So they're going to raise interest rates a lot. It's already over 5%. So, but they're just trying to bring interest rates up. And I was watching something last night. It's it's speculated that so much of this type of stuff could possibly send us into recession at some point. Now it's debatable whether or not that'll happen, but when you try to counteract the inflation and bring things back down to earth, it might dip temporarily as you kind of get it back right, like overall, if that makes sense. So, still watching this kind of stuff, but housing has been one of the bright spots through coronavirus, the pandemic, all of that stuff. Housing has been super strong through the whole way. So now, affordability is a big issue, as I've been talking about recently. Been following the market. If you're out there trying to buy a house, affordability is a big deal. So this article is about the interest rates, and the interest rates. They talk about how it puts downward pressure on the market. Obviously, if the interest rates raise higher and higher and higher, the prices should go down at some point. But apparently the interest rates haven't gone high enough yet to make enough effect to drop down the interest rate. There's still a lot of demand, and the supply is still really short. So it's not making enough impact to actually drop the price. So at this particular point where we're at right now, interest rates are rising and prices are still rising. So that's at some point, the interest rate rises are expected to help drop the prices, but not yet. So let's see what this article is talking about. So and I increased the font. I noticed in the last videos the font was kind of small, so I tried to blow it up. If you can't really see it, please comment. I check them and everything, and it looked a little bit small last time, so I tried to blow it up, but I won't want it to be too big. Let me see if I can do it just a little bit more. Let's go back, because that threw some going to add up. Okay, well, let's just leave it like this for a second. But so the odds of a home price decline hitting your local housing market as told by one interactive chart. So they have a chart here that they put together, and I think CoreLogic put it together. It's like a real estate research firm. And I think CoreLogic put it together. They're saying what is the probability of, and this is nationwide, of the housing prices dropping. So let's go down here. Let's go straight to the chart here. So the odds of regional home prices dropping over the coming year. So in 2022, will the home prices drop? And all this blue and light blue in Atlanta, Sandy Springs, Alpharetta, it's a low chance. So what does that mean? CoreLogic putting housing markets in the 1 of 5 categories based on the likelihood that home prices in that particular market are to fall over the coming 12 months. Here are the groupings. Elevated over 40% chance, 30 to 40, medium 20 to 30, 10 to 20. So we're in the low 10 to 20% chance that the prices will drop in the Atlanta area, and I saw some of that very low, 0 to 10%. So there's a pretty low chance in all of the South, like Midwest. Where is this? Kalamazoo. So Kalamazoo, prices may drop there. Certain places in Michigan, medium. Detroit, medium chance. Cleveland. So some of what you call the Rust Belt, PA. So Atlantic City, some of this New Jersey stuff. New York, I'm trying to see where are the prices dropping. So some places in Arizona. I don't even know what some places in California, apparently. But everywhere in the South, all around us, all of Florida is very low. The Atlanta metro is low. So a 10 to 20% chance that prices will drop on the in the calendar year 2022. And they're already saying that interest rates will raise. So it's just making it a tougher position for buyers right now. Hopefully what we'll see is the price increases slow down. Like the rate of increase will slow down. That's what we're hoping. Because at this point, it's not benefiting anybody for prices to be so high. Because the one person I could probably say is benefiting is people that own extra houses. But a lot of these people that own extra houses, they have renters, and they see the rent's really high too, so they're just continuing to rent those out, at a high rent. So, but people with extra houses, they could sell at a high price right now. Let's see what they say. So, Federal Chair Jerome Powell, so this is the Federal Reserve, made it clear the central bank is done sitting on the sidelines as inflation chips away at the value of the dollar. The plan put upward pressure on interest rates until price growth relents. So they're going to keep raising interest rates until prices come down. Historically speaking, Hartfeld, where spiking interest rates can quickly price out home buyers. That's already happening. On Thursday, 30-year fixed hit 5.11, up from 3.11. So it raised 2 points in four months and change. The borrower who took out $500,000 at 3.11 would have paid $2,100 a month. Now it's up to $2,700 a month. I've seen that same thing. I'm working with a buyer. She was at $250. Now she's at $210. With the same job, same everything, and because of the interest rates going up, it has decreased her buying power. And I've seen this firsthand with that particular person who's been looking at the same houses, and the price has been going up, and at the same time the interest rate's been going up. While the swift move up in mortgage rates is undoubtedly putting downward pressure on the housing market, like I said, it's putting pressure on the market, but is that necessarily bringing prices down? The researchers are saying that in this calendar year, it's not very likely that Atlanta prices will go down. Doesn't mean that housing prices are about to crash. In fact, every major real estate firm with publicly released forecast model, including Fannie Mae and Zillow, still predicts home prices will climb further this year. Let's just try to skim through here. So, Fortune, increasingly a chance that economic shock caused by soaring mortgage rates could see home values fall in some overpriced housing markets. So, that's what I was showing you. There are a few isolated ones, but most of the country is rising. So the core logic, and we already looked at this part. So that's a little bit about what's currently going on. We could possibly see more days on the market as demand lessens, but the prediction is that there will still be enough demand and there will still be enough people, given that there's not that many homes on the market to still want houses at this price. There's still enough demand to support the market at this point and still make it competitive, even with rising interest rates, even with high prices. So hopefully it'll at least slow the percent of growth, and at some point, we don't know what the next rate hike will do. And apparently we have two more, and that's not it for the year. Like, they're going to do more after that. But they said, they're just going to get it in the short term. The Federal Reserve Bank is planning on getting very aggressive and raising interest rates at half point. And that's just the base rate. What the banks do as a result of that is, they raise their rates as well. And then the market, the banks is kind of like the end user, and kind of like the factory or something is like the Federal Reserve Bank. So like that's like the raw rate, and then attached to that is what banks actually charge, to make what they need to make or whatever. So the Federal Reserve has not raised rates 2% since December, but the end user mortgage rate has increased over 2% since December. So that 0.5% in the next two meetings, that 1% that the Fed is going to raise could cause it to go up more than 1% for the end user when you're getting a loan, if that makes sense. So I've thought for a long time that the interest rates going up at some point is going to actually be a good thing to settle. It's going to be one of the catalysts to help settle out the market. But the big thing is still there's not enough houses for the people that want houses. And even given everything that's going along, there's still a lot of people that want houses. I was talking to a new construction person the other day, and I was like, so I was working with the buyer on a waiting list, and was like, how many people on the list? She's like, I don't know, like 500 or 1,000 for like 50 houses or something. So like, that's, they were going to build 50 and there's got 1,000 people waiting. Not to say that all of them will make it. Some people drop out or whatever it is, but it's a ton of demand. But anyways, hope you found that informative. That's just kind of what's going on currently. I'm going to go ahead and cut it off there. And I hope everybody has a great week. Continue to check me out every Wednesday, and have a great day.